retail world. So I'm Caroline Harrelson. I am a retail recruitment specialist with the Retail Coach. We are super excited. I am super excited to have Chris Ressa with us today. Chris is the Chief Operating Officer at DLC Management and podcast host. So Chris, I'll just let you say hello. Whoops, wrong button. I'll let you say hello, and then I'll okay, hold on a minute. Let's see. I told y'all my my technical abilities. I know what the problem is. Let's go up. I'll let you say hello, and then I'll tell him a little more about you. Does that work?
Okay. So I'll give the 30-second spiel. My name's Chris Ressa. I'm the Chief Operating Officer at DLC. Caroline knows we own shopping centers throughout the United States. We're an owner developer, and we do everything in-house. So we're vertically integrated. So we buy it, we own it, we manage it, we lease it. We don't really third party anything out. And we don't do a ton in the third party space either. We do some specialized products. We're primarily an owner and developer of projects. And I oversee anything that touches the assets. So our leasing, property management, construction, marketing aspects. And so I'm talking to retailers every day, and I'm seeing things, municipalities, and I'm seeing things that are happening in the field. I'm a father of two, a husband, a 4-year-old and a soon-to-be 3-year-old. Oldest is a daughter, Juliana, and my son, Hunter. And my amazing, incredible wife, Victoria. So that's a little bit about me. I'm in northern New Jersey. Our offices, we have offices all over the country, but I am based in Elmsford, New York, which is about 35, 40 minutes north of Manhattan.
Awesome. Well, let me brag on you for a few minutes, because there are a few things that you left out, and I'm gonna look at my notes while I do this. So you were recognized by Chain Store Age by landing on the magazine's 10 Under 40. We want to ask how long ago that was and how old you are now, but 10 Under 40 Rising Stars of Retail Real Estate list. Now, as Chief Operating Officer of DLC Management, you oversee DLC's $2.5 billion asset portfolio and are responsible for property level operations, which you mentioned, including leasing, property management, construction, and marketing on all owned assets. And then here's the part where you can certainly show me up. Despite your hectic work schedule, you invest a significant amount of your own personal time creating thought-provoking content, sparking great engagement on social media. I think I saw that on LinkedIn, you have over 28,000, maybe close to 29,000 followers. And your retail and real estate related posts are regularly trending at the top of the board. And then another super interesting fact is that your influence in the digital space does not stop there. You also host the highly acclaimed Retold podcast.
Yes.
So we have a lot of meat to unpack in the next hour. So 45 minutes, 50 minutes, whatever time we're going to try to have allotted here. So let's get going. Yeah, you told us a little bit about DLC. Tell me more about your role there. This map that I showed a few minutes ago, which is an incredible map. Y'all's website is what? It's dlcmanagement.com. If you go to properties, it shows this list of properties, and if you zoom in, you'll see multiple properties in a lot of those areas where it's looking like you've just got one or two. It's a really neat site because it's so interactive. I realized last week that you can actually do virtual tours of your spaces. So tell me how you began working with DLC, more about the properties that you guys manage, if they're all owned or just more about it in general.
Yeah, we have majority are owned, but there's a couple that we manage, but majority are owned. And I started my career on the retailer side. So my first job out of college was with the Sherwin-Williams company. I was in their corporate real estate department. I was working on new stores. I was working on some warehouses, district offices. I was in their corporate real estate department. And so I had an insight as to how a retailer thinks about their footprint and their corporate real estate I realized I had a passion for commercial real estate more than I did the paint business. Sherwin-Williams was a great company. It was a Fortune 200 company. It was
Mhm.
Fortune 300, excellent company, great place to work. But my passion really lied in real estate and not necessarily in paint. And
Mhm.
so I wanted to move on over to the commercial real estate space. I moved on over to a landlord in New York City called Ashkenazi Acquisitions.
Okay.
And then I moved to DLC in 2007. I've been at DLC since. I came up through the deal making ranks, the leasing ranks. So I was on a plane in retailers' offices, at sites all over the country. We've owned and bought and sold in many markets that we're not in today, but I've done
Mhm.
a lot of business all over the country,
Mhm.
in many offices. And that just, I rose up the corporate ladder at DLC.
Mhm.
And that's kind of how I got in and where I am today.
Okay. So, quick question. With DLC, and I know every shopping center is different. Is there any kind of, is there a certain kind of center or property that's kind of you guys' bread and butter?
Yeah, I would say we're one of the largest private retail owners in the United States. So you can see by the size of the value of our assets,
Sure.
we're still trying to grow. So we've worked in a lot of different assets. I think at first it starts with open air. We're not really playing in the enclosed mall world. We've played in it before. We're not really playing with that. Even on redevelopments, we're trying to stay away from that.
Okay.
We're very focused on open air. I think the second thing is we have some small assets, but from a scalability perspective, a productivity perspective, we're focused on larger assets. So typically a deal size of $20 million or up is typically 25 million. Typically there's always exceptions where we'll look at a smaller deal, but typically we're looking at larger deals. And we're looking for things that are broke but can be fixed. So we're one of the few that are playing in the large open air with some level of value add opportunity. That's an investment word, but
Mhm.
there's some risk to the table. There's a good story, but we believe in the site and the opportunity, and we think that our platform can add value to it. So broke but can be fixed, over $20 million. Eastern half of the country today. We're not opposed to the West Coast. We would need something of scale to add
Mhm.
infrastructure. We don't third party anything. So it would have to be 10, 15 assets, something like that, that would bring
Okay.
us to a Salt Lake or Denver or something like that, even though we like those markets.
Okay.
And I mentioned that because we call ourselves, we're people first, real estate second organization. We believe, people talk about location, location, location. I like
Right.
to say it's people, 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 and the people behind the real estate that make the location, not the location itself. So we're very focused on, we believe that we have a great team, and our team is the value add component that enables us to really transform properties. And that's kind of what we work on. We own smaller centers. They've come in a variety of ways.
Mhm.
We own some really big centers. We own a lot of medium-sized centers. If you thought about $20 million or up $30 million, it's typically a multi-anchored center,
Yeah.
not just one anchor, multi-anchored. And there's probably a level of a box or two that is vacant and we believe can be repositioned, something like that.
So when you guys are acquiring these centers,
Yeah.
I mean, are you seeing that they're for sale, or does anyone ever just cold call you guys and find out about y'all and say, I think this is a good group that may be interested in take it? How do you find out about most of the centers that you acquire, small or large?
So we've been in the marketplace, and we have a brand now since 1991. So investment sales brokers are calling us and emailing us every day. We're seeing deals that come to market every day, and we're seeing deals that are off market every day. And then we have an acquisitions team that's out and identifying certain assets that we would love to try to tackle, and even if whether they're on the market or off the market. So
Okay.
that's how we're seeing deals.
Yeah. So, and I don't want to get into specifically what we're seeing in retail yet, because I want to talk about that in a few minutes. But just out of curiosity, are there any main brands that you guys usually have in your centers, or in the majority of your centers, or that you work with the most? what kind of, if we looked at your centers, what are some of the retailers that we would see?
So there's not one brand. What I would tell you is that we're definitely in the open air value space. So you'll see a lot of Walmart's, Targets, TJ Maxx, Ross, Burlington, Five Below, Ulta, Starbucks, and what you would see in the open air value retail space, providing great brands, providing value to the American consumers who's in majority of our centers, Costco and Home Depot and the likes of that. What we typically don't have today, but we are talking to a lot of them historically. Most of your traditional enclosed mall retailers haven't been in our properties, called that the likes of Victoria's Secret and American Eagle. But some of these retailers are making moves out of having an off mall strategy today. And we are talking to a lot of those that you would traditionally see in an enclosed mall setting that aren't there today. But you want to know the bread and butter today? Yes, it's mostly the open air value retailers, Target, Walmart, TJ Maxx, Home Goods, Burlington, Five Below, Ulta, Home Depot, blah, blah, blah.
You took the next question right out of my mouth. I think you told me recently that you guys had been working with more Victoria's Secret and American Eagle type retailers more recently than before, just because they're moving out of the traditional mall setting. And I was going to ask you, I truly cannot remember what retailers those were, but you took the next question out of my mouth. Okay, so that's the DLC management side, which obviously is huge. What does a typical day in the office entail for you?
For me, so that's a great question. So my world has definitely changed over the last few years since I took on the new role, right? I would say it's much more strategic, much less tactical is the answer. Somewhere between at any one time, between 60 and 70 people report up to me. So majority of my time is people. So whether that's dealing with clients, dealing with our internal teams, but it's definitely more strategic in nature. How do we move the needle over the next, 24, 36 months? Less about, I do get involved in the day-to-day. I have the department heads that run the departments report up to me. And so we're talking on a regular basis, whether that's daily or weekly, on the day-to-day. But a lot of my time is spent working on strategic and moving the company, pulling down one lever, knocking down 30 pins. Strategically, how do we, change the game long term versus how are we going to move the needle tomorrow? Albeit, I talk to a lot of clients. I am talking to the construction world often. I'm talking to the facilities management world often. I am working with my teammates to help remove roadblocks so they can get their jobs done and the like.
It's interesting that you say your goal is to move the needle over the next 24 to 36 months, because as you and I have talked about a few times, just managing expectations of people to realize that's kind of a lifespan of retail to make deals happen and to make certain things happen. And so whether you're in the leasing side of it, the property ownership side of it, or, the retailer trying to get the deal done, I think 24 to 36 months is a realistic goal until you can see, change in your corporation, or until we can see change sometimes in our client communities. So interesting information. Now, I want to change gears a little bit. That's your professional side, and not that this is no less professional, but this is certainly a very creative outlet. You are the podcast host, and I was actually talking to my dad the other day, and I said something about a podcast, and he was like, how do you find a podcast? So, there are still those that may not be familiar with podcast. You can Google what that is if you're not, but you host a podcast called Retold. Tell me a little bit about how you decided to start a podcast about retail nonetheless, and then in your own words, what the podcast is about.
I started to realize that from a branding perspective, social media was important. I really focused on LinkedIn probably in 2016 or 17. I grew that audience. I post content regularly and decided what's the next type of social media and audience that I could make an impact and I like to talk. I have a face for radio, and I realized that a podcast was a great way to do that. And I could, in an interview style podcast, I could bring on great guests. I had a really good network and of retail and real estate influencers.
Mhm.
And then we thought about and we looked at what was already available from a retail and commercial real estate perspective. And we thought about what would be a great podcast. And we came up with the story of how that store ended up in your neighborhood. And we'll often say that people will sit around the table and say, they put Starbucks over there. And I will say, the podcast brings you who they is and how it happened. So I think it's a really good podcast to learn about commercial real estate, to learn about retail, and to learn about the ins and outs of business deals
Mhm.
and what are some of the challenges and how people overcame them.
Mhm.
And we bring a lot of different perspectives of how that store ended up in your neighborhood. If you look at this here, Andy Kimmick, he is the vice president of real estate for Duck Donuts.
Mhm.
Ellie Gurak is the owner. He's an entrepreneur of Magic Beans, a high-end baby gear and toy store. Maria Toliopoulos is the VP of real estate strategy for Ulta.
Mhm.
Alan Barokis was the head of leasing for Brookfield Properties, one of the largest private equity owners of retail in
Right.
the world, and the former head of real estate at the Gap, and so on and so forth.
Yeah.
So, and we bring on people of all walks. These are majority of the people here are, Jennifer Rood and Zach Mintier. These are people on the corporate real estate side of retailers. We bring on landlords, developers, architects, environmental people, the retail coach.
Mhm.
We bring on people who all have a different perspective of how a store might have ended up where it did.
Right.
And and so we've been doing it where, as you can see here, hundreds of episodes in, that type of episode, the story of how that store ended up in your neighborhood, happens every Thursday.
Mhm.
Some Tuesdays, we have something called the Real Talk series, where there was a lot of fanfare around the podcast, and we have a network of retail and commercial real estate influencers. But they might not be involved in how a store ended up where it did. They might be a different part of the business. Today, I spoke to Barry Scardina. She was the president. She is the head of retail for the Americas for Cushman & Wakefield, a consulting and brokerage arm, but she used to be the president of Calvin Klein Retail for North America.
So she had a good story, I'm sure. Awesome.
Well, she didn't have a story. She was just talking about general retail. She wasn't on the real estate side. She was running the whole organization. She wasn't really specific on one store. And then you had, we had Dana Telsey, who is a famous retail analyst. She has a shop that analyzes the performance of stocks and makes recommendations on behalf of clients to people who are investing in retail companies as a stock investment, from the equity side. And she has amazing insights in retail, and she's on CNBC and Bloomberg and everything all the time. And she was on. So we have a lot of different types of guests and two different types of shows, and we're going strong.
Yeah, I mean, it's super interesting. So from the retail side, as I'm sure you're familiar with so many of these from when you're doing the leasing side of it, we talked to Jennifer and with Dairy Queen, and Zach with Five Below, and Maria with Ulta all the time. And I've talked to them on the phone many a time. I've emailed, I've texted, but to hear those little personal stories about the retail world that they've got have been so interesting. I actually was telling someone the other day how interesting this podcast is, and HTO is another company that we work with a lot. Love working with those guys. Brad and Andrew are great, and I think you had Brad on maybe.
I did.
And he was talking about how they couldn't open a store until there was like an endangered species, an endangered salamander or something, and so they had to build this filtration system so the salamander didn't wash into the gutter, and that's the way that HTO opened. And I was like, who would have known? Like, it was the most interesting story. So anyway, props to you on the podcast, because who would have thought that you could make a commercial real estate deal that is so much like back and forth and comments and submitting this and an LOI and all the things. Who would have thought someone could make that interesting? So you've certainly done that. I want to talk for just a few minutes now, as promised, about the state of retail today. I actually, again, this is one of your centers. It's just a screenshot that I took of your website. It has nothing to do with this center itself, but in your properties that DLC has, what are you guys seeing from a leasing perspective? Is leasing up? Is it down? Were there a lot of vacancies during COVID? Just kind of tell us where we are.
Yeah, so I think through COVID, one of the things that happened that was interesting was there was this call to arms to landlords by headline news to help retailers out, which
Right.
was a challenge because we had bills to pay just like everybody else, and there was this assumption that they own the real estate, landlord's fine, and this small retailer needs help, the big landlord doesn't, which is not
So
necessarily true.
Mm-hmm.
And so, but we knew that we had to help in any way that we could. We proactively, in like late February, went and created a systematic deferral program for our small businesses that they could opt into. And we went and proactively offered that before they reached out to us. And so that was a huge hit with many of our mom and pop retail tenants. And then the large nationals who were facing huge challenges as well, we had cut bespoke deals with them where there was a lot of exchanges and terms and whatnot to get them through. And it, we wouldn't have wanted to go necessarily through the pandemic. Some of those turned out to be good scenarios, and some of those turned out to be great scenarios for both parties, but it was hundreds and hundreds of bespoke negotiations. It was a trying time. It was a lot of sleepless nights getting through, and we were in the rent collection business. They were in the try to get open and defer rent as long as possible. It was a really challenging time, but I think by and large the industry came together. I was really impressed by the resilience of the entrepreneurs who really came through, and so that's what really happened in the last year. We still were signing some new deals with retailers. Obviously, it was less last year.
Right.
And leasing velocity has picked up, and it is, as strong as it's ever been. There are significant challenges through that, but it is picked up and as strong as it's ever been right now. But there's challenges to that. And, the world has changed, and whatever side you're on, whether it's a landlord, a broker, a retailer, a municipality, if you're not prepared to change on a dime, you're going to miss what's coming. Every stakeholder has to be in a position to move quickly. And if you can't, you're going to miss.
I totally agree. I'm so glad to hear you say that retail is as strong, if not stronger than before, and that you're seeing all this retail come back and everything. We're certainly telling the municipalities that are our clients that, because all of a sudden my email is being inundated by brokers that I haven't heard from for the past year, or maybe retail contacts that I haven't heard from the past year. And they're saying, hey, you sent me an email 6 months ago. We are ready for that market. Show me what you've got. So we're seeing that too. On that note, though, of what you were kind of talking about retailers having to pivot. And not just retailers, everyone's having to kind of pivot on a dime. Are there any trends that you're seeing in retail post-COVID? And are there any changes there in which retailers are maybe growing right now that are more able to post-COVID? And I hesitate to say post-COVID because I know there's the Delta variant and everything, but now that things have opened back up, and are there any retailers that you're noticing just still can't do anything?
So let's take a step back and think about what actually has to happen for a national brand or a national brand to open up in a market, right?
Right.
So in today's world where headline news was calling the death of retail, which couldn't be further from the truth,
Mm-hmm.
we call them retailers, but what makes up retailers is people.
Mm-hmm.
And there is obviously risk in opening. We can have all the data in the world and Placer AI and all these things, but there's a risk in opening a store in a market. You have to place capital, you have to invest, right? And what has to happen is some person, a corporate real estate professional, that used to be me on the side, has to go in and put their stamp of approval and push for a board or committee, a person to approve a spend of dollars and opening up a new business in a certain market in a post-COVID world where everything's changing and if you make a mistake, what happens next? 'Cause it's your mark on that. You were the one who did that. And so
No,
what does that mean? What does that mean? That means that to start to, we have to work with, and that doesn't mean by giving it away, but both, whether it's landlords, brokers, municipalities have to work with groups to try to make this work, because it is in a world where headline news is calling the death of retail and major retailers are, in some regard, closing stores. You can't think like you did yesteryear. And if you do, they're going to pass on your site, your market, whatever. And so I think that's step one. I think, post-COVID, I think people are often saying that the online sales have growth. Well, we actually have in June less online penetration. It actually declined. But what I would tell you, here's what I think is interesting. That's not the story to me. The story to me is that if this proved anything, it was the importance of the store.
Right.
And it might still be there might be some, hesitancy when pulling the trigger, but it proved the importance of the store. I think, even in a world where people were stuck at home and I'm using air quotes, couldn't go out and shop, about 80% of all retail sales, if not more, were done in a physical store and still are to today. And so Americans are out in the stores, even when they were supposed to be quote unquote locked at home. And so to me, that speaks volumes. I believe the myth is that, I believe the most affordable way for retailers to profitably deliver goods to the American consumer is through a store. And so there are many digitally native brands that are not profitable. They're growing market share. They're not profitable yet. And what do they end up doing? They end up opening physical stores.
You've talked to me about that before. I want you to go into that a little bit more, because you broke down for me the shipping cost versus the overhead and why that is. And so kind of leading into my next question for you, do you feel like retail is moving into an online format? Why do you think brick and mortar is always going to be relevant?
So there's a couple of things. The one that the world doesn't focus on enough is the financial reason. And so typically, if Caroline and Chris want to open up a t-shirt shop, the cost of entry to go online is by and large less expensive than opening a physical store.
Right.
However, and you can do a couple $100,000 in sales, something like that. The minute you want to scale and you want to grow the business, the physical presence is, my opinion, less expensive and more profitable. And typically we're seeing that's around $10 million in revenue where it starts to get really costly. And so what causes the that expensive nature, there's a lot of things, right?
Mhm.
There's shipping, and we all know there's a cost to shipping, right? Instead of delivering goods to a store and having you come pick it up, I got to deliver 4,000 different items to 4,000 different households.
And we all expect free shipping now, thanks to Amazon and all
Right.
the retailers that are offering it. So
And that's not a profitable proposition. And
Mhm.
majority of Americans, there was always those studies that, most Americans can't afford a $500 car emergency repair, or,
Mhm.
X amount of percentage, used to be like 78, I don't know what it is today, of
Mhm.
Americans are paycheck to paycheck. Well, if that's the case, most Americans can't afford to pay for shipping on every item. And retailers can't profitably deliver the good to you for free.
Mhm.
That doesn't mean that there's not pressure online. There are people that are growing online and sales are growing unprofitably. At some point, I think that comes to roost. And so what else is causing that unprofitable nature is customer acquisition costs.
Mhm.
That's fancy way of saying marketing to acquire a customer.
Right.
And there are some retailers that are
Mhm.
digitally native only, where their customer acquisition cost is more than brick and mortar's marketing and rent combined.
Mhm.
That's how, and I think that's because there are so many online stores. I read there were, pre-pandemic, there were about 1.8 million online stores, and there were in the hundreds of thousands of physical stores. And so if that's the case, what does that mean to me? That
Mhm.
means we don't necessarily have an oversaturation of physical stores. Maybe we have an oversaturation of stores that haven't evolved and need to change, and some need to go out of business and some need to be reinvented. But I think we have an oversaturation of online stores.
Yeah. Yeah.
And
Absolutely.
so that's a contrarian view, clearly.
Mhm.
And I'm obviously talking my own book a little bit, as I own shopping centers with physical stores, so I recognize that.
Well,
Um, but I am bullish on, and then we're seeing, in leasing activity, like I said, there's a demand for retailers to open new stores more than ever. It's harder than ever to make a deal today.
right.
There's a lot of complications. There's tenant restrictions. There's government, local municipality restrictions. There are construction costs are rising. There's a lot of impediments.
Right.
And if you can get through some of those, it can be fruitful, but it's
Mhm.
challenging. And the good news is, I think the online sales are the tailwind, not the headwind. It's
Right.
clear we need online presence. Omni-channel is important. You just look at Target. They're like a great example. I keep talking about Target. They have shipped. They'll ship it to you same day. You can go
Right.
buy online, pick it up in store. You can buy online and they'll put it in your trunk, or you can go in the store and shop. My family uses it all. They're fulfilling majority of their sales that are online from a store, showing
Right.
the importance of the store, fulfilling from an online delivery perspective. And so I believe that this is um, proof of the importance of the physical store. The
Mhm.
physical store is here to stay,
Mhm.
and it's going to grow and it's going to change. There will be increased demand as some of this, unproductive retail real estate goes away.
Mhm.
The demand will increase for certain projects, like the D mall that doesn't need to exist anymore.
Mhm.
That might not be retail in the future. Well, that's taking supply of retail real estate out of the market, which is
Right.
benefiting the good, productive retail real estate and creating opportunities for those developers.
Yeah.
And
On
and
like the Target note, you're saying how they just the omni-channel way of how they're fulfilling orders. I will look at an item online, but then I'll see two are available at my local store, pick it up today or ship it. And I'm like, oh yes, I will pick it up today. Thank you very much. And so, yeah, I mean, the brick and mortar store is certainly here to stay. I want to ask you before we run out of time,
yeah,
knowing that our audience is city managers, economic development directors, municipalities, what can municipalities do to be more proactive and helping guys like you who own or lease the center get more retail in? What are some problems that you see in the municipalities where you guys maybe have some centers, and what are some things that you wish they may do a bit more proactively that would help you guys? and ultimately help the whole.
Yeah, so we're the incubator of retail stores, and you need developers to have real estate to bring stores to markets. I think there's some interesting things. So I think zoning and planning and zoning can be a long process, can
Mhm.
be a touchy process, but at the end of the day, um, some of these codes are old, and we need a better way at scale in the United States to move things along that can move that process quicker at times.
Mhm.
They're there for good reason, but it's a challenge, and the retailers are moving. They used to be slow. Retail used to be slow. They have accepted the fact that the consumer has evolved and the consumer is changing rapidly.
Right.
And so they have pivoted to be a fast moving, nimble industry, which it used to not be. And they've done things to adapt to the consumer.
Mhm.
And if that's the case, right, we always talk about real estate development. You're trying to satisfy a demand today that
Mhm.
maybe you can't satisfy to the market for 3 to 5 years. Well, then the demand might be gone. And
Right.
so cutting that timing, whether it's planning and zoning, whatever it might be for an approval, figuring out how to navigate the waters is compelling to retail, right? We have spoken to retailers who are like, ooh, that municipality's tough, and that might
Mhm.
shy them away from
Mhm.
a municipality. You know, there are in a, so planning and zoning, I think signage is one. You had some signs. Retailers love signage,
Right.
and and municipalities try to really limit it to get the same look and feel. And it's
Right.
real angst for retailers, right? You have these Fortune 500 brands, even if they're not, just these large enterprise companies, and they have one municipality saying, well, if you're going to do business in our market, then it has to be this way. It's very tough for a large business to pivot and have
Mhm.
a system to be able to open and operate
Mhm.
on a bespoke basis like that everywhere. It's really tough, and it's not a really cost effective way to do things. And it's at times unproductive. In
Right.
general, most municipalities have been pivoting. They work with developers and they work with retailers. And I think there's a lot of good synergies. I would say
Mhm.
that I think from a speed perspective, if we can get, speed to execution from municipalities is going to help them, retail and landlords. But, there's things like planning and zoning, signage,
Yeah.
parking's going to change, right? Parking's going to change.
Tell me
I,
a little bit about that. I
I
mean,
a couple years ago, I said, I was being sarcastic, but I said, if you're building shopping centers
mhm.
with parking lots where people park cars, you're toast. And so parking's going to change, parking requirements, whether it's parking for restaurants or whatnot,
Curbside,
because
all the
the
things.
consumers just changed. And we deal with a lot of sites that are either underparked or overparked, and we're trying to develop things to meet parking codes, which is inefficient. It's not the best way for the asset, the shopping center, and not the most efficient way for that retailer. It
Right.
might meet, doing things to meet code, not to drive revenue. And I think that enables there has to be a balance. There's no
Right.
doubt, but when we're looking at, trying to increase sales tax data, sales taxes create jobs. One of the things we need to do is, how do we bring those sales there? And, trying to, an example might be trying to figure out a plan so that it meets a code to get passed from a
Mhm.
parking requirement. I think has an opportunity. That's an opportunity for municipalities to change in the future, I think. But by and large, municipalities have been fantastic. They are pivoting. They are working with developers and retailers. I think most of them get that the world is changing and evolving,
Yeah.
and I think that'll all be good for the world.
Yeah. Well, Okay, great answer on the signing and the parking and the zoning. A couple of thoughts there. I listened to your the Magic Beans episode of your podcast, and I remember that guy saying that he opened a store in like 30 days or 40 days or something
Yeah.
crazy. And your question to him was, "Oh, well, you must not have had to get a building permit." And he said, "I did actually." And he said that city was incredibly helpful to work with, to where we needed to be open. It was a toy store. We needed to be open for the Christmas season, and they helped us make it
Yeah,
happen.
yeah. What they did, he said to them, to the municipality, in order for me to make this deal, I need to be open
By
by
Christmas for toys.
Christmas, before Christmas to get Christmas sales. Otherwise, it doesn't make sense for me. And what that municipality did was they said yes rather than no. They said yes, but and they walked him through how to get open versus creating roadblocks for him to
Awesome.
say that, we're not going to be able to do that. You have to go through this, that, the other thing, which, when there's laws and codes, it is what it is. But clearly that
It takes some
municipality worked
time.
with him to figure it out, which I think was great. And they got it open, and that was years ago, and it's still open today.
It's awesome. Yeah. Another thought on that, a lot of the municipalities that we work with come to us because they're seeing a lot of the retailer go to the competing community. So the community that's right there getting those sales tax dollars instead of locating within their city limits. And they're saying, well, why are they all going over there and not over here? And a lot of it is because, well, if your signage and your parking and you've got all these restrictions, then the retailer can pull from the same consumer base maybe 5 miles away. So they're obviously going to go there, right? And that's sometimes a hard thing to wrap your head around.
Yeah, I would say the following. I think that what drives the bus first is um, the fundamental characteristics of the market.
Mhm.
Clearly, the political climate in the market is one factor. I
Right.
wouldn't say that it's the only or driving, right? What
Right.
the demographic trends are a reason that happens. You know,
Anchor spaces, who else
yeah,
in the market?
macroeconomic factors, right? Is there a new job formation over there where there's an office building and someone relocated? What major corporation moved in, and so that makes it more compelling. Infrastructure from road networks, things like that move markets,
Uh-huh.
people moving. And I think those are the characteristics that drive the bus.
Right.
But as those things are happening, can we make things easier for one municipality versus another? Sure.
Yeah. Okay, here's a question that I actually just got from a client of ours through a text. So I'm going to go ahead and ask you. What brands would you encourage smaller or maybe mid-sized communities to target? I know that you're really working in larger shopping centers, but
Yeah, but I'm in small markets all over the country. I'm in Carbondale, Illinois, which is a very small market, Ithaca, New York. So I'm in small markets all over the country.
what are some of the brands that you're putting in those shopping centers and the smaller markets? Which ones would you say that they would target? And I know it really depends on what anchor is there and what restrictions, but if you were just kind of putting together a list with your team of, hey, we've got this center, let's look for these retailers. Any brands that come to mind?
Yeah, so I don't start with necessarily the brands. I start
Mhm.
with
Or sectors, maybe categories.
yeah, we might start with categories and
Mhm.
talk about, like, doing a gap analysis, understanding the trade area, understanding, the demographic and psychodemographics of the
Right.
market. I think you
Which
start
we
there.
all do. Plug for the retail coach. That's part
Right.
of our data package. So
Right.
yay
So I,
there.
I think that's the first piece of it. Like, you have to understand the consumer in the market.
Right.
And sometimes, there's a constituent in a market that wants X, but the majority in the market is, voting with their dollars for Y. So I
Right.
think that's the first thing, is like really understanding the market.
Mhm.
And I think when you're looking at, from a brand perspective, I think the first thing is understanding, like, and just thinking about where brands are today. right?
Mhm.
We know that if someone's closest store is 5 hours away
Mhm.
and they open up in major MSAs, and their closest stores in a major MSA,
Mhm.
the likelihood of that brand going to one of our small markets is probably, they don't have the infrastructure set up for it.
Right.
It's very hard. That could be years away, if ever.
Right.
And so, in there are a lot of brands expanding into small markets. There are grocery stores, there are the off-price apparel, there are, the tween toy stores of Five
Mhm.
Below. There's cosmetic stores like Ulta, there's the dollar stores. There's wholesale clubs, home
Mhm.
improvement stores like Harbor Freight Tools, and
Right.
there's many brands, but I think it's, before you just start thinking about, what brand should we go after, I think it's like really understanding the consumer, understanding your demographic. Most of the retail brands will say who their core consumer is, right? Their
Mhm.
core consumer is a average household income of X. So if you're
Right.
in that range, that's a start,
Right.
right? We like to be in places where the population is Y.
Right.
Well, if you have that, there's the second start, and things like that, I think, are the first things before you just get to, I
Yeah.
want X store.
Yeah, absolutely. Yeah, you're speaking my language. I mean, with the retail coach, that's the first thing that we do whenever we start looking at a client community is we do the demographics, the psychographics, the leakage gap analysis. Okay, we are running out of time, and for some it is their lunch hour, for some it is mid-morning, and they're starting to get hungry. So, in the spirit of your Retail Retold podcast, you like to pose some fun questions to your guest.
We
And
do
so,
have one more question in the chat. Should we go to that first?
yeah, let's go to it. All right. Can you read it? Because I can't click over. I've told you the whole
So
technology
the
problem.
question is from Alan Cox. How do you
Okay.
see downtown type of retail spaces competing with suburban shopping centers going forward, or as malls are closing?
Great
So
question.
there's a lot there. So we don't own in downtown environments, but I think the way I think about it is a robust downtown environment
Hmm.
should support the rest of retail, and the rest of retail should support a good downtown environment. And I think that if municipalities work with developers and there's proper in place planning and zoning, you can have a great downtown environment and have uber successful supporting suburban retail outside of the downtown. And I don't know how large this downtown environment is, and where it is in its evolution
Hmm.
of the downtown. If it's fully formed and there's a few vacancies, if it's really needs a lot of work. But I don't view them as necessarily competing. I
Hmm.
view them as they should both be supporting each other, and hopefully providing different types of shopping experiences to the consumer.
Right. Good point. I mean, we always say and we always hear retail begets retail. And so if you've got a big center like yours, then maybe you've got some consumers coming into the market to spend dollars. And then if you've got a great downtown area, maybe this is just me personally, I'm going to go to the shopping area, but then I'm going to go downtown for the unique restaurant experience or the unique boutique that I'm not necessarily going to get in your shopping center. But if you're bringing consumers to the market through the larger center, then the hope is that they're going to gravitate to downtown and spend some tax dollars there too.
Yeah.
Um, Great question. Um, I'm going to ask Chris two fun questions. If anyone has any more questions for him, type them into the chat box, and either Chris or Austin can read those to me because I can't move my mouse while I'm screen sharing. I'm sure I can. I just don't know how to. So, Chris, here we go. You ask on your podcast a couple fun questions, and in the spirit of online versus brick and mortar, I want to ask you some brick and mortar questions. So, Chris is out running errands and you have a few minutes to spare, or maybe you just finished your work day a few minutes early and you look at your watch and you realize you've got to run in or drive through one retail or restaurant. So one retail store or restaurant. Where is Chris typically going to go when he's got those few minutes before he heads back home?
From a necessity base, it's Target. I'm always in the market for Pampers.
When you're in that season of life, that is.
I'm always in the market for Pampers. From a new empty my wallet world, I got into golf this year. So you might find me at a golf store, whether that's Dick's Sporting Goods, a pro shop, something like that, spending money to be terrible at golf. And those are two places that you would find me today.
Yeah, for sure. I mean, the golf experience, like at Dick's Sporting Goods, I think the last one that I was in, you could go and try out the golf clubs and they've got this whole experience type thing. That's something that you can't get online. Good answer. Last question, and it can't be Target or diapers. What is one brick and mortar store, retail, not restaurant, that would affect your life for the worst? So basically, you couldn't live without it if they went to online ordering or delivery only. No pressure.
That's a great question.
Do you want me to tell you mine? But I feel like I can't use this because you've used it so much. But mine is Target, and I do love Target.
I have a bunch. I'm trying to be really.
When Target's dressing rooms opened, like I was here for all of it. I can't order Target clothes online. I have to try them on, and I'm not good with returning things once they come in the mail. So I'm a dressing room kind of person. So I have to have that. I have to have that in-store experience. But I want to hear yours.
From a necessity based, I would say the grocery store, and I would say Home Depot. From a non, and I guess this would be necessity based, wherever I'm buying jeans from, I need to, I need to, so there's a couple things. So Chris Walton, for those who don't know, he has Omni Talk Retail. He has 5 reasons that stores exist and why they should. Like someone says, why do stores exist? He has 5 interesting reasons. 1 is inspiration, 2 is convenience, 3 is immediate gratification, 4 is interaction, the ability to touch, and 5 is experience. I would add 6, affordability in the long term. But so I like that art of discovery. I think discovery is hard online. I love it in a store. I also love the taction and interaction with jeans. It is not easy to find the right pair of jeans for me. And I need that. And I'm wearing jeans today. I need that in person. So
agreed.
Last pair of jeans I bought in person was at Bloomingdale's. So I need that
experience.
I need that. So those are 2 necessity, and 1 I'll call jeans necessity, but maybe less so.
Yeah. All right. Well, I think I saw one more question come across the chat box. Can you see that?
Please explain how you think parking and parking lot requirements are changing. What is the future of parking? I think densification of properties is happening. Drive-throughs are happening. I think that buy online, pickup in store is happening. I think ride share is happening. And for all those things, I think that retailers and developers are going to challenge the status quo in parking ratios, and what might be seemed as like not enough parking is going to be a necessity for some. And I think there's some challenges that I think that, the biggest one, it's not just parking, but right now, that for traffic, one of the biggest ones is drive-through queues, right?
Absolutely.
The expanding of drive-throughs. I think that impacts, parking obviously, but I think, someone's classified as a restaurant, but what percentage of their business is drive-through versus buy online, pick up in store, and delivery matters.
Right.
I will be at Vegas in December. I'm asking. I will be.
Was that the next question? Good.
Great.
Yeah, I mean, having those curbside pickup spots is huge for parking as well. All right, well, I'm going to wrap it up. Chris, this was wonderful. Thank you so much for coming and just sharing your insights with us. Just a reminder that this was recorded, so it will be available on our website later for anyone that wants to share it with someone in your community or anything like that. Chris with DLC Management, podcast host, LinkedIn extraordinaire. Thank you so much for your time.
Yeah, if you want to reach out to me, you can hit me up on LinkedIn and check out our podcast.
All right. Sounds good. Thanks so much for your time. I really appreciate it. And I hope everyone has a great rest of their day.
Thank you.
Bye.